Let's talk about the big picture here for U.S. stocks and whether or not this news of no deal, according to the president, is going to change the outlook. ChrisRecker is the Chief Investment Officer at AZA Capital Management. Chris, it's always good to have you here. I'm looking at your notes right now, and are you sure these are your notes, Chris? I see you're buying stocks, yield curve steepening, credit spread widening, good news. What the heck is going on? Where's the furry bear I've come to love?
Oh, I'm still a bear in some ways. I mean, I think broad market valuations are extremely steep. We're looking at low returns on some of these indexes out for several years. But I think if you want to own stocks, and we always own stocks, there are plenty of places to hide out in equities today. And, we talked to you about defense stocks, Lockheed Martin having a little sell-off today. These trade in the teens. If you want to go more speculative, to Kratos, which does, drones, where the Department of Defense is going, that type of stuff, I think we're fairly bullish on.
Do you see those as having election risk, the kind of old stereotypical who's good for defense, who's not? Is that really a thing?
I believe they're both going to be good for defense. The United States the Secretary of State is in Asia today, where this country has an Asian focus on defense. We're working on building out deterrence with allies there, Japan, India, Australia. And I think both parties are very focused on this. I think it's a bipartisan issue. And I really think we have at the Pentagon maybe the best strategic team that we've had in a generation. And the advances they're making in tech with the contractors are going to lead to more investment in this space and maybe slightly more growth than people anticipate today.
Okay, so you're looking at companies here that also could maybe just with the drone stuff too, it's almost kind of like tech in a way. It's just tech with a buyer that is not, everyday Joe buying shares of a graphics company or a cloud stock or something, right? This is the government as the buyer.
Absolutely, and I think you hit the second most critical issue with this investment is that it's becoming much more like software. Everything that DoD is doing is driving software driven within these platforms. And so we're going to see much more programming, much more systems. Look at the transitions that like Cisco and those types of tech companies are making from hardware to software and security. And I think we'll see that in the defense contractors. And Lockheed Martin is more a systems integrator. They manage the whole project and they have very advanced tech. So I think and we've had a lot of Silicon Valley get involved with defense lately. And so I think that's something to really consider.
Okay. So these are some of the defense names that you like. I want to poke the bear here a little bit, though, Chris, because as we've talked about, I know that you have a view of the economy that is a doubtful one, that will be able to grow out of the debt that we've taken on, that growth risks from competitors like China could put problematic pressure on the dollar. Should a lack of a fiscal support to plug the holes of this leaking ship accelerate your bear case?
It would. And I would say that, look, we still have a very expensive equity market. Bond markets are telling us at very low yields out, 1.5% out 30 years, right around 1% out to 20 years. And, we have basically low growth prospects in the United States. And I think, earnings valuations do not reflect the amount of growth that we're going to have, and the high debt levels we have to work out of them. A lack of stimulus with 25 million people out of work, they have to be taken care of. And I think the government will get there. But it is, if they fail to do that, consumption expenditures have not recovered to where they were and where they need to be. And that's going to be a drag on investment in manufacturing, industrial production. We've seen it in the numbers. We're not where we need to be. But, going back to your initial comment, I do think that the Fed getting out of the corporate bond market, letting high yield spreads widen a little bit, letting the cycle work, letting corporations letting the market heal itself is a big part of this. And I think we're going to have to go through a bear market at some point.
Christopher, when you look at the potential for stimulus beyond, one of the narratives building right now is that a dim sweep in November is going to unlock huge amounts of fiscal stimulus for the market. One could argue that today, with the president's odds dropping, that possibility has also been heightened here. Is there an obvious path that you see that would make you change your view about some of these overhanging problems if there's a fiscal plan that is so growth positive that we get out of this? Or is that going to cause too much rotation in markets out of that stuff that people go to when there's no growth, tech, that we're kind of in this lose-lose for the market, not necessarily the economy?
Right. And we have said in the past that we think that the government needs to take a more active stance in investment. And regardless of who's elected, we need something that focuses on reorienting the economy to build out our technological capabilities, our infrastructure, and that will be critical to getting this economy back on its feet. And we need a long growth, a long investment horizon or roadway, so that other companies, private investment can crowd in public investment, or public investment can crowd in private investment. And I think that is critical. And if that's what the Democrats want to do, I think that will be positive for the economy and will help us get through this faster.
Okay, Chris, thanks for the thoughts. Always good to have you here. Appreciate it. Nice time today. ChrisRecker, Chief Investment Officer at AZA Cap.